Today is the second and final day of the Africa CEO Forum that is happening here in Kigali, and a lot of conversations have been planned out for today, from how to build a sustainable e-commerce industry to how we can boost infrastructure development here on the continent. As you can see right behind me, there's a lot of excitement as people are eager to enter into these conversations. I am Fiona Muthoni from CNBC Africa, and I'll be bringing you this highlight special.
Happening of these forums is really helpful because people are coming together, they're exchanging ideas and they're talking, and opportunities are shared.
We have to break that barrier of fragmentation and change the mindset so that we see our regions as one market.
I see a united Africa.
Africa today is just the opium of the world.
One people and one destiny of Africa.
I see Africa becoming a key investment.
Infrastructure plays a big role in economic development as well as achieving the sustainable development goals here on the continent. A report by the United Nations released in 2017 indicates that only 30% of Africa's population has access to electricity, while only 34% has access to roads. Now, we discussed on the efforts put in by the governments in regards to this.
Infrastructure, for it to have a big impact, the regional integration is very key. And the work has been going on in East Africa, both in the Central Corridor and in the Northern Corridor. And there has been some kind of progress, but there is more momentum that is needed. And that is mainly coming from the highest authorities of the political level to make sure that we can always work together as a region. And we have seen it when it comes to the linking all the countries, especially the railway, the energy, the ports, and so many other kind of activities are helpful to reduce the kind of transportation costs in the region, which is very key for our economic development.
As we speak now, the EAC intra-trade is still at below 20%, the EAC intra-trade. When you look at the Southern Africa, so SADC, the intra-trade is at almost 45%. And when you look at the EU intra-trade is at 68%. So if we become more unified, more together as a community, we are likely to see intra-trade within East Africa, meaning that the businesses will grow trading among ourselves as partner states before even we look at other markets. So it's an East African community offering over 200 million people market. That is obviously an obvious opportunity that if we unify and we come together as a community, we are going to gain. So businesses will grow because it will be an assured market. Number two, we are going to see growth of human capital. People are going to grow within this. They don't have to go and look for opportunities outside East Africa. They'll be able to look for opportunity within East Africa. And therefore, East Africa will be depending on their own human capital, human resource to make sure that we grow.
Infrastructure cannot be developed country by country. There was a good example which has been said here about the Inga project for generation of power, why it's not being done. So there are so many reasons. I think political reasons are the major ones. There are, yes, technical reasons, funding reasons, but when the political reasons are put aside, then everything will be done, financing will come, and we have a market. We have a market to buy that power because every country is saying we need power, we need power, we need power to reach everyone in the rural areas, everyone in our cities where load shedding has become a common practice. And it has been said that power cut in some of our economies is harmful, up to taking a big portion of our growth out of our reach. So everything is known. So it's a matter of political will. So where to find the political will, where to buy it, where to purchase it, how to create it. It's a matter of leadership, continental leadership and regional leadership.
African pension funds and insurers hold the promise of deeper domestic funding pools to fuel growth and development by stepping in to help close the financing gap on the continent's infrastructure development. Now, despite the key role they could play, they are still underdeveloped. We had a conversation on the way forward and how to boost domestic resource mobilization here on the continent.
Local funding has many benefits, and for me, the biggest one is to reduce the risk of currency fluctuation. We have many examples of infrastructure development projects which have collapsed in terms of profitability just because the tariffs, the revenue are in local currency and they must be converted in US dollars. You must have the liquidity in US dollars in the market to pay back, to service the loan. So there are ways of achieving the local funding. First of all, the local funding must be available. So what we have today is not enough. It's estimated that 400 billion US dollars of assets under management are with pension funds and insurance companies. Out of that money, most of it is short-term because you have to service to meet the obligations you have to paying fund, to paying claims for insurers. So we need to create vehicles to mobilize resources for long-term.
The financing aspect is very, very important. All the investment taking place here in our region, the East African community, is dependent on the commercial banks. And the rates for the commercial banks are usually very expensive and in most cases short-term in nature. And that's really boils down to the importance of the stock exchange in the region. Each country has its own small stock exchange, but I think a regional stock exchange would be very, very important. A regional stock exchange does not necessarily mean that it is a physical stock exchange, but we could interlink all the stock exchanges in the region to make sure that we can have that kind of capacity that can be able to attract the resources within the region, but also outside the region.
Capital market is about long-term. It's about long-term, whether you finance infrastructure or other businesses. A part of our resources are channeled toward consumption. So, level of saving. If you take, for example, many capital markets in the world, in the advanced world, you find that insurance companies and pension funds are the major investors because they are the ones who have the resources, financial resources. Just take an example of South Africa. 11% of the GDP is with the insurance companies. So that's a huge amount which can be invested in infrastructure, in businesses, and so on.
What role could the private sector play in developing infrastructure here on the continent, as well as what are some of the challenges holding back development here in Africa?
Government's financing the infrastructure alone is not sustainable, and it's not very fast because government has a limit to how much it can provide in terms of financing infrastructure. It's very important to tap in the large pool of the private sector resources, so the partnership between public and private is very, very important. Right from the planning up to the implementation, and also making sure that they work together as partners so that there is a process of how to de-risk some of the big projects by the participation of the government and other support institutions to make sure that some of the big projects can be able to be taken on by the private sector. The government can use its own resources to leverage the big sum of the big amount of the private sector in terms of investing on heavy projects.
Generally, if you consider airline as part of public infrastructure, and this is what I consider, public sector will not put their money into it. First of all, because as it was mentioned here in Kigali many times, there is a shortage of equity, and equity is not fully available, and nobody has the appetite to risk money in airlines because airlines are known for having a huge capacity of loss making. I think that states have the responsibility to generate and incentivize airline creation. The same way you expect the state to create an airport, you expect the state to launch an airline. Then there will be a moment, and I think this moment will come sooner than later, when airlines will be able to be privatized, when private operator will come onto the market. But again, it will take some years before the market is mature enough to have a non-national carrier concept. If you take the so-called low-cost concept, they all failed in Africa because the market is not ready for this model. Not only because of the regulations, but also because of the fact that even if you put more capacity, you don't generate more traffic instantly. So you need to have a very, very solid pockets to be able to sustain, investments and losses before you turn into a profitable venture.
So the first thing that people were telling us when we started is that they didn't have trust in e-commerce and internet websites. And so when someone tells you he doesn't trust, you have two options. Either you force him or you listen. And so what we did is that we figured out that the way to build the trust was to offer at the time something that we called cash on delivery, which is very unique to Africa. And that means that when you purchase on the platform, you don't pay for anything and you only pay when you receive the product at your doorstep, which was a very instrumental decision to make people start using e-commerce and Jumia. Once they get used to e-commerce and when they get used to purchasing online, then they can start to pay online first.
So there's a significant gender gap on the continent, both in public sector positions and also in the private sector, both in positions of senior management and executive management, as well as on boards. So women across the continent still have just about 14% representation on the boards of companies, which is very low indeed. These challenges can definitely be addressed, and one of the ways of addressing it is through policy. And one of the policies that we are advocating as the women in the Africa CEO Forum group is quota systems for public sector organizations, as you have here in Kigali, for example, in Rwanda. I think the process of empowering women and diversifying the leadership of companies, and by the way, diversifying at all stages, should be institutionalized. And I believe that CEOs should be given targets for diversity, the same way they're given targets for bottom line performance.
Despite the challenges that the continent has, we asked some of the delegates and participants on Africa's future, and this is what they had to say.
I would say they need to sustain this spirit. They need to sustain this. This must not be a one-off thing. They must now focus in bringing owners of business now across. We need to increase the numbers. We want to see the entire world seeing Africa, business community, speaking in one voice and in one place, deliberating and talking about issues affecting Africa.
I see a united and unified market that has all the critical infrastructure, both physical infrastructure and regulatory infrastructure that enable free movement of goods and services across the continent. And I see a continent where we are also deriving the benefits from technology, from entertainment, and these critical sectors that are going to drive growth going forward.
I see a united Africa.
Africa today is just the opium of the world.
One people and one destiny of Africa.
Over 1,800 delegates from across Africa and beyond have attended the 7th edition of the Africa CEO Forum that happened here in Kigali, Rwanda. As you've heard, Africa is on a rise. I am Fiona Muthoni from CNBC Africa, bringing you this highlight special.